We have with us Mr. Vivek Mishra, leader, Indirect Tax Practice at PwC. Thank you very much, Mr. Mishra, for speaking with us here on NDTV Profit. We've heard about GST, we've heard about Centre trying to get consensus with the states, and they have also spoken about a mutually agreeable architecture that they are working on. Would you give us a sense of what kind of an architecture the government could be looking forward to when it comes to implementing GST?
Well, we have some details which have been provided over time, and broadly it is a dual tax. So every transaction, whether goods or services, will have two components of tax on that transaction. The Centre will tax every transaction, whether goods or services, and the concerned state will also levy a tax on it. What the rate would be is still up in the air, but let's just assume for a minute that the rate is 20%. So every transaction will attract 20% tax, and of which 10% will go to the Centre and 10% will go to the concerned state. That's the basic architecture.
Right. But the kind of hurdles that we are seeing at this point in time, which states are not agreeing to, let's talk about them one by one. Let's start with the petroleum and the petroleum products at this point in time. Now, the states want that not under GST. They want it out of GST. What we've heard so far is that Centre is proposing that it should be under GST for some time, and later they might keep it out. What's your sense?
No, actually, what makes sense to me is either of two things. Either you keep it out of GST in the beginning, and therefore the taxation on petroleum products is similar to what is currently in place, or alternatively you bring it into GST but have an additional tax which is not creditable imposed on it. So using my 20% example, let's say if you have 20% GST on it, you could have a further 20% of a special some kind of a tax, whatever the nomenclature is, doesn't really matter, and the latter 20% would not be creditable to the consumer. So it can be done either of two ways, and as to whether the creditable portion is 20 or is 10 or whatever is a matter of numbers. They could run the data or run some simulations to see what will give them the desired revenues. So to my mind, I don't think the issue of petrol and petroleum products is a very complicated thing, and this is an issue that can be decided fairly quickly, and I believe that from what I've read in the last few days in the press, that the Centre has given in to the state's demand to keep it outside GST. So I'm not sure if this is a big showstopper anymore.
But you're saying that having petroleum outside GST or inside GST is not a very complicated issue. But, states have been fearing a loss of significant amount of revenue. Can you give us some data as to how exactly is that going to be a loss for states? What's the current tax rate? And if petroleum, say for example, it is not included, then how will it continue to benefit the states?
So the ideal situation, assuming you had a dual GST, is that petroleum products should be inside GST, which means that for any business that uses diesel or petrol to either power generators or to use in the vehicles which are used for that business, they would get a credit for the GST which they pay on their petrol or diesel purchases. That would be the ideal scenario. That scenario could have been the way the current VAT system works and the way the current SENVAT system works, but it isn't. In both VAT and in excise and service tax, you do not get credit for any fuel which may be used for your business. So what they mean by keeping it outside GST is simply this, that the credit would not be available to a business of the credit from purchase of these products. So to that extent, the credit would be lower than the tax they've paid, and therefore, to the extent that they don't get credit for diesel or petrol, to that extent there would be a cascading of taxes. And I've heard different estimates. I've read different estimates over time of these of the revenues from these products constituting 30%, 40%, etc. of the total revenues from VAT of a state. So that's why it's a very important source of revenue, and that's why I would assume that neither the states nor the center feel that it's feasible to bring it in entirely into GST on day one.
Right, but you know, if they, for instance, if they what we are also hearing, that they do not include petroleum products for the initial phase, and later they try to do that, then again it will be the same process. Do you think that would be a feasible option then?
I think that is more feasible than a purist kind of option where petrol and diesel are brought into GST with full credit for their consumption as an input tax credit. Because if petrol and diesel become creditable, then the what is generally referred to as the revenue neutral rate would be much higher. It is because of the high tax, both the excise duty and VAT, because of the high tax on these products and the high revenues from these products, at the rate of tax on VAT or on account of excise or service tax can be at the level it is. If petrol and diesel were fully creditable, then the general rate of tax would have been much higher. So that's the principle, because you can't give a tax concession and not find a way to, you then have to find a way to pay for it. So I think that's the principle, and it seems fairly sound to me that either it would be kept outside GST, or like I mentioned, there would be GST plus a special tax on it which is not creditable.
Right. Now let's take these two particular scenarios that you've just now explained. How exactly is this going to be, how will it impact a consumer, somebody who's there, somebody who's going to be a user of these particular petrol and diesel products? How will it impact him directly?
So there will be no impact, in the sense that it's not that a concession which is available today is being taken away. It would be status quo as far as any consumer is concerned, because even today they are not allowed credit. And let me correct myself and introduce a small technicality. If someone is a pure consumer, is not operating his or her business, then in any case they don't take credit for any GST, whether it is on petrol or diesel or on cars or on anything that they buy, because GST is supposed to be a tax on consumption. So in any way, in any case, a consumer will not have any change, will not see any change
absolutely
from
unaffected if
the
this
system
GST
today.
implementation happens.
As far as this petrol and diesel point is concerned, and even as far as all other purchases are concerned, I don't think the individual consumer will notice any difference, because he doesn't take credit for taxes. So to him, it's just a cost.
Right, and also I wanted to get a sense of, the way all the corporates and the business houses are waiting for GST rollout. They think that it's going to be a really big reform. If you can just explain to our viewers, for example, the government does manage to get consensus, and they do manage to solve the three contentious issues, one being the petroleum tax, second being the entry tax or the octroi, which now we are hearing that it's going to be subsumed within the GST from the beginning. And if they do manage to give some kind of a mechanism as far as the CST compensation is concerned, how exactly is that going to help the business houses?
Yeah, so the thing is that businesses in India today are faced with at least two systems of indirect taxation. One is SENVAT, the other is VAT. One is on manufacture of goods. SENVAT is on manufacture of goods and supply of services. And VAT is levied by the states and is on sale of goods. Now these two taxes cannot be credited against one another. So therefore, to that extent, there is a cascading of taxes, because if you cannot take a credit, then it becomes part of your cost, and the next taxable transaction, which is a sale of goods or a provision of services, has to recover that cost just like any other cost which is incurred on that transaction. So that's what we call a cascading of taxes, because once a tax becomes a cost element, then you will have tax applied in the next transaction on that cost element as well. So GST is seen as a much more transparent alternative, because it is levied on every transaction with a very, very limited list of exceptions, such as charities and things like that. Other than that, it is levied on every transaction, and therefore it is transparent. And each business, whether they are a service provider or a manufacturer or a trader of goods or into construction, any industry, each business takes on the GST credit and offsets it against what is known as their output liability, until it finally results in a sale or a service to the consumer. And then the consumer, that's it. He or she pays the price plus GST, and that's where the whole chain ends. So industry is seeing this as a much more transparent and a much more simple tax, and that's why they're looking forward to it.
All right, Mr. Mishra, thank you very much for speaking with us here on NDTV Profit and explaining to our viewers what exactly is this GST architecture going to look like eventually, and how significantly it is going to be a big bang reform as it is being talked about. So the government is trying very hard to at least introduce the Constitutional Amendment Bill in this session of the Parliament, and is trying hard to get consensus from the states on the three key issues which the states have been holding back for.